Good morning, it's Shaun Farrugia from Optimised Accounting, and today we're going to talk about a topic that confuses our clients to no end, PAYG instalments. First of all, what are PAYG instalments? So a PAYG instalment is basically an amount of your own personal income tax that the ATO is asking from you, and this goes towards a future tax bill that you will receive. So usually how people get entered into PAYG instalments is basically by the ATO. So what will happen is you'll lodge a tax bill, you lodge a tax return, you might get a tax bill for, let's call it $95,000. On that $95,000, it'll say that it might be due for payable in a month or two, or maybe 6 or 9 months, depending on how early you lodge the tax return. What happens after that is you then get a letter saying, welcome to PAYG instalments, if this is your first tax payable in Australia, or you get a letter saying your PAYG instalments have been varied. Now, what both of these are one and the same thing. It's the ATO saying you're going to be paying tax quarterly from now on, and it's basically a letter saying how much they expect from you. Now, what people then often ask is, there's two questions usually, is does this PAYG instalment amount go against my income tax bill that I've just received on my notice of assessment? Simple answer is no, it doesn't. That amount is still due and payable based on what the notice of assessment says. The PAYG instalment purely goes against your next tax return. So in this case, the 2019 financial year, because we're standing in March 2019 at the moment, which is 3/4 of the way through that financial year. The next question we get asked is, how much do I need to pay per quarter? How has it all worked out? Now, the ATO, I do believe the letters from the ATO are vague, and they are actually a little bit scary to read. So we don't kind of blame clients for not really understanding this. We try to make it as easy as possible in our intro emails, but I think people tend to get spooked by the large number that shows up. So the way it generally will get calculated is, let's say you had that $95,000 tax bill. The ATO are forever the optimists. They believe next year not only will you earn a similar amount again, that you'll actually exceed it and earn $100,000. Have a $100,000 tax bill. So from 95 last year, they go, we'll take a punt that you're going to owe 100. And then they're going to have this amount, how often you pay quarterly. Now this confuses people because it's, what, I have to pay $100,000 quarterly? What the hell's going on here? This just does not work. Now, it is misleading, it is actually very difficult to understand, but the way that the ATO calculate it can vary between payers, but the way it should work is as follows. Say you lodge your tax return and you've lodged it just prior to the first pass of the financial year. They want $100,000 from you next financial year. Okay, that's great. You'll pay your $95,000 as and when it falls due in a few months' time. But for the current financial year, what they're wanting to do is make sure that you're paying tax for the current year more aligned for when the income is actually being earned. So on your September BAS, they'll say, okay, well, $100,000, we want $25,000 from you in this quarter. In the December BAS, same again. In the March BAS, we'll go again, and then in June, they'll ask for the same amount. So by the time you get to the end of the 2019 financial year, you've paid what the ATO has expected, and if your income does remain pretty static to the previous year, you won't have a large payable or a large refund. Everyone goes on their own. Now, the next question we get is, well, usually no one's really lodged their business return prior to the September quarter. Let's say you're lodging it now, so in early March, and you've got the March BAS and the June BAS ready to go. If you've never paid any tax instalments before, what the ATO can actually do is they'll say, oh, we want $100,000, there's 6 months left of the financial year. What they might do is make it 50 and 50. Now, this can come as a bit of a shock because it's a bit of a cash flow squeeze, especially if you've been on a honeymoon period where you haven't paid progressive tax in Australia for long. You might have your $95,000 payable that was for income earned up to 18 to 20 months ago, and then be asked for March and June separately as well. So the ATO can ask for it like that, but the ATO's treatment of this is very, very inconsistent. While the ATO should ask for that, and if you've paid smaller instalments in September and December, they will credit those off. So, if you've maybe made $10,000 payments quarterly in the past and you've received a variation notice, then these amounts would be 40 and 40 for argument's sake. But what the ATO can do, sometimes they do have a heart and a little bit of mercy, and what they'll do is actually keep them at the normal 25 as it should go going forward, and then you'll obviously have the remainder to pay when you do your tax return. It's hard to not be able to give a definitive answer on this, but the truth is the ATO is inconsistent, and trying to work out their logic is extremely difficult. That's assuming that there is logic. Now, how do I vary these instalments? Now, let's say your income has dropped for the financial year and you think that you're only going to have to pay $50,000 in tax in total. Now, we're using large numbers here, but nice and round ones. Don't be too worried about the dollar figure. On that 50K, what you would do is we then can vary these instalments downwards as you go. So there's no need to ever pay a large amount of tax that is not going to be relevant for the end of the financial year. We vary them down to make sure you're only paying what you should pay. With all of our clients at least, is we provide an income tax forecast for you. So what we do in that forecast is it'll actually say what we're expecting your tax to be, and we can then vary that amount on the income tax instalment for you, so long as we complete your BAS by the due date. So if you are having very large instalments, it's imperative that you get information to us as soon as you can, so we can complete the lodgement and vary the instalment down if that's what's required. Now, if your income has increased, do you need to increase your instalments? The short answer is no, you don't. There's no obligation to. All it means is on our forecast, we'll tell you how much to put aside. You just put that into your savings account and you can give it to them at the end of the year. Otherwise, if you prefer to get it out of the way and have it out of sight, out of mind, yes, we can vary the instalments up. I'm not sure if there's any other questions. If there are, please let us know. Thank you.